What is up, everyone? CryptoVatsik here with another technical analysis video for you today. Nothing of what you're about to see is considered financial advice, and as always, they're just my opinions. If you do enjoy this content, I would really appreciate it if you gave this video a like, and don't forget to subscribe. I've got an awesome one for you today. You don't want to miss it. Let's jump right in. Okay, today's going to be an update video for you on Galagames. It's been 2 months since my last video on this crypto asset, and a lot has happened since my last video. And super quickly, before we jump into the TA, I'm going to pull up a screenshot from my last video just to recap what exactly happened. Okay, so here's a snippet from my last video on Gala where I had marked out my buy zones in green here. We were currently trading around 2.5 cents, but continuously breaking down in a bearish trend. And I had said if we broke this high time frame level and the dotted line, that I'd be looking to enter within the green zone below, closer to 2 cents. And I'd be saying that I'd be looking for longs within these areas, targeting the previous high up here at just over 4 cents. So let's flip back to the chart quickly. So here's that same chart, just zoomed in a bit. And you'll notice we continued to get some bearish consolidation chopping around the low. We did end up breaking this high time frame level on the dotted line here, just over 2 cents. We came down quickly to my lower buy zone in green here with a very sharp V reversal pattern and abruptly reclaiming this high time frame level with a very powerful move up to that level that I had marked out just over 4 cents. So if you were able to get long within either of these buy zones, you'd be looking pretty good at the moment. So hopefully you watched that video and you were able to accumulate a bit down in these areas, because clearly those prices didn't last for long. If you missed that video and you do want to go back and watch, I'll share it up here with you right now if you're interested. But today's video is just going to focus on some new technical analysis based on the new information that we're currently seeing. Okay, so this is another chart that I shared on my TradingView account back in January 12th, and I had marked out a high time frame resistance block up here in red with multiple areas of reaction, and I had said I expect price to struggle to flip this high time frame resistance zone. I did not expect it to shoot right through it. So let's flip over to the chart now and get into the TA. Okay, so here's today's current chart, and you'll notice clearly there's an area of consolidation around that high time frame resistance block. So clearly struggling to push past this resistance still at the moment. So now the larger question becomes if we are going to flip this resistance or if we're going to break down from here and get another opportunity to get in lower. So there's some really interesting things going on within the candle formation right now that I'm going to dive into, but I always find it's easier to do that on a clean chart. So let's go ahead and refresh the chart to a clean slate. Okay, we got a fresh clean chart. Let's zoom out to those high time frame key levels first on the monthly chart. Okay, so we got a few areas of interest right off the bat here. So first level I'm going to mark out is from back here in February 2022. Clearly a shelf and breakdown level. The next one I'm going to mark out comes from the low of this May candle here on this massive wick, as well as the high from the July doji candle right here. And then finally, the next one I'm going to mark out comes from this October doji that we got here, and I'm going to mark out the bottom wick. It's really important to start on your high time frame levels to get the clear overall picture and then zoom in for those trade setups on lower time frame. So let's do just that. Let's drop down to the weekly now. Okay, so clearly some really nice reaction right off the bat on this level that we had marked out from the May low. Demand fought to hold the level here with a failure to hold. Price came down to that October level that we had marked out with a swing high, retesting that previous breakdown level from our May low level that we marked out here. Then clearly the bearish trend continued down, consolidated for a few weeks with our ultimate breakdown to our bottom. But now on the weekly, what I'm seeing is some really nice reaction with the current bullish trend. First, we've got a weekly SR flip of this previous resistance level, our weekly candle close above and retest on this next candle's wick right there. So classic SR flip, and now price pinching, consolidating right around this prior resistance monthly level that we marked out way back here from May, and it looks like it wants to flip it depending on the current weekly candle close. This is still yet to be confirmed, but obviously the bulls are putting the bears to the test currently. Okay, let's drop down to the daily. So again, we're going to mark out that high time frame resistance zone that I showed you earlier, because that's the key point right now. And it's established from this area of support that we had for quite some time, only a couple deviations below, until that eventually broke down. So that is a very key high time frame level to break. I think if we break past that, it's a clear sweep of the previous high back here in August, as well as a sweep of this monthly level, the thick black line that I marked out. So simple enough, you break these highs, you sweep these levels, I think. And some added confluence would be the previous range that we had from this swing high down to the swing low. Okay, so if you can see that, so from this high off the swing low with the equilibrium of this range being right here in the middle. So let's go over and see where that EQ lines up. It lines up perfectly with that high that we had marked out right here. So definitely an area of interest for me if this ends up breaking up. We do have a fair value gap right here in price. So if we were to get a breakdown from this bullish trend and get a lower time frame market structure break and bearish retest back under this level, then I think at the very least we sweep this low here from January 11th. And of course, as usual, I'd be looking for that breaker structure to trigger a long back up to this high. And then, like I said, if this low does not hold, then I'm looking for a sweep into this liquidity and a breaker set up again down here within this fair value gap. And this is on the daily time frame. The gap is right here. It would also line up with this major market structure break that we had from these previous highs that consolidated briefly underneath and then smashed above. So ultimately a retest of that high time frame market structure break from these previous highs. But that might be too sweet of a setup and we just may not get it. Okay, let's drop down to the 4-hour now to some lower time frame to evaluate where a trade setup could be. Okay, I've cleaned up the chart for now. And what I'm going to do is I'm going to mark out the lower time frame key levels. The first one being the Monday high here, and the second one being last week's low. So this is just a range of sorts with the EQ being right here in the middle. Okay, there's our range with the demand zone from this consolidation right here with only brief opportunities to long that zone. So I'd be interested in longing within green if we get it. However, if we do take out Monday's high quicker than anticipated, I would also long the breakout and retest of that. I would also long the previous high. But anywhere in here, I'm not really interested because your risk is too much. And it would also very much depend on the price action that we do get if we come into green. If it has a slow, weak bounce and starts consolidating, I would not look to enter a position on anticipation of a breakout to the downside. So it does very much depend on the formation and structure of the candles, meaning I'd look for a quick dip into green with a market structure break and prompt move back to the upside. That is my trigger I'd be looking for. You want to see strength on a trend like this with brief moments of opportunity to get in as a sign for a continuation of the trend. So that's why you zoom out to those high time frames, mark your key levels, and then you zoom into the low time frame to spot signs of strength and continuation or signs of weakness. If you're interested in shorting or getting in lower than current market price, I would be watching for an H4 break of market structure of this trend as a first trigger, making a lower low from this higher low here. And then your second trigger would be for weakness within green and a break of this low from back here on Wednesday the 18th. That would mean that we've also broken this range low. So 2 or 3 triggers there for me to get in on a short or cut a long position. And my target would be at least a sweep of this low from Wednesday the 11th. And then again, if you remember, we had this daily fair value gap sitting somewhere down here that's been untested as of this moment. So if we chop around in here and lose the EQ and we get that breaker structure that I talk about down here, that's great. I'd go long. Scenario 2 would be lose the level, come back and sweep this previous low. But again, looking for that breaker structure. And if we do not get that and it just shows weakness, then I'd expect a sweep into this liquidity zone down here. Now, those are all kind of the bearish scenarios. I covered earlier on the high time frame, the bullish scenarios of targets above if we were to break these highs. So let's cover now on the 4-hour, the bullish scenarios. So first things first, I want the EQ to hold. So we could come up, we could sweep this high again, come back down, test the EQ of this range, but ultimately would want to see it hold and just continue to consolidate in the upper 50th percentile of this range. I would much prefer to get long within this green zone though. So if we get an opportunity to get in green, it's a clear long for me with your risk being below the low if we get it. But again, I wouldn't expect the opportunity to last very long as we haven't really seen that just yet. So the other scenario is if we do end up breaking Monday's high and we're able to flip that resistance into some area of support, you could go long up here with a breakout trade, but you would want to wait for price to establish some sort of new low so that you could get long and have your risk below that previous low. So something like this type of structure. There's another way of looking at this. I'll just clean up the chart again. So there's clearly a resistance level trend here, as well as our support trend. This is otherwise known as a rising wedge, which is typically actually a bearish formation, but in a very strong uptrend, you can see it consolidate within here and price really start to pinch until it could break to the upside. So you could play it that way as well. The problem I have with these setups is your invalidation is less clear. So if we did start to chop around in here and continue, and we do see that breakout, more often than not, the move is completed and it's actually just the target of this wedge breaking out and then you'll see it come right back down into the wedge and then often actually reverse in the trend. So that's why I'd prefer to get in down at that demand zone with your stop loss below the low, and then you'd be targeting a break of the high again, like I said. Because in the grand scheme of things, on the high time frame, this has been a very powerful move that will eventually be due for a larger correction. Ideally, what I would like to see is if we could get some sort of quick flash crash down to this Wednesday low with a sign of strength. So say we can't break this resistance, we lose the trend, and we get a flash crash down to this low, sweep the low with that market structure break back up and reclaim, say, this 200 moving average would be a strong signal of strength, and that would be a nice trade to break these highs. That would be ideal, and then you'd also leave people sidelined expecting to get in down here on a retest of this previous high if it's very bullish, which would pump price even further. So there's lots of different scenarios. It just depends what it's going to do. You have to react accordingly and have to recognize those different setups and structures, and if it breaks down, have a plan. If it breaks up, have a plan, rather than just following your bias and saying it's only going to go up or no, it's definitely coming down. You got to be flexible as a trader, and that's what makes good traders so advanced, is that they're flexible. They're able to identify those reversals and those shifts in trends and structures. So that's just my opinion anyways. Whatever works for you, to each their own. Anyways, that's kind of what I'm seeing right now. I do want to pull up RSI as well quickly. So we are seeing some weakness, okay, in RSI. We had some 3 higher highs here with 3 lower lows on the peaks of RSI, but we did ultimately get our dump here. So that could be the dump from that bearish divergence. RSI is clearly bouncing on some level of support structure here around that mid zone. So it doesn't mean it has to correct further. It could still pop, but I think what I would really like to see is a break of this lower high here on RSI, which it looks like it might be doing. If we can break that clearly with confidence, I think it negates any sort of bearish divergence that we're seeing here, and we would probably see some sort of retest and then another high, which I think ultimately price would then break this Monday high, something like that. But if price does something like this, where we do get a wick right here and RSI starts to do something like this, not able to make a higher high, then it would lead me to believe that we are due for a large correction, because we'd have multiple lower highs on RSI with multiple higher highs on price, and then likely come back down. That would be my expectation, at least. Anyways, overall, I think this has been a super powerful move on Gala. I think signs of strength like this during bear markets is a sign of its potential for the next cycle. You want to buy into strength. You don't want to just buy coins that are 90% down. You know, buy into strength. Don't assume it's going to come back down to the level you want to buy at. Meanwhile, don't FOMO in just because something's pumping. You know, if you believe in something that's fundamentally sound and it starts showing strength, the bull cycle is going to last for a year plus. So signs of strength are there for a reason. And Gala is definitely one of those assets that is displaying that. You know, and as powerful as this move off the low has been, you know, up 2.5x, even if this does break down and we start coming back down towards the lows and we prolong this accumulation into the next cycle, this has still displayed strength. So if Bitcoin dumps and Ethereum dumps and the bear market's not over yet, this overall strength has signaled something for me for the future, despite if we come back down and start coming near these lows again. Again, that's just my opinion. Other coins that have not really shown any strength, it doesn't mean they can't do really well, but other coins that kind of just did something like this while others rallied like this, perhaps you want to do some further looking into those. Perhaps they perform as well, perhaps they perform as well as the others, or perhaps they don't. So just something to consider, at least, as you accumulate and dump your hard-earned funds into this risk market. Thank you all so much for joining. I really appreciate it, and I also really appreciate the likes and the engagement, the comments. Let me know what you think. I want to hear from you, whether you agree or disagree, what you think of Gala as a asset in general. Hopefully you found something within this video that's helpful to your trading or your investing strategies. And if you did, please share with your friends and social media. I'll keep creating content for you for free to hopefully continue to teach and educate. So thank you again for joining. And as always, you can follow me on Twitter at CryptoVatsik. And don't forget to subscribe to the channel. We'll see you on the next one. Peace.